The Big Short sequel is here with Michael Burry going short on the market with $1.6 billion. Is he going to be wrong this time? Let me show you two very interesting charts. So the blue one over here is basically the US Fed interest rate over the time, and the orange one is the Nasdaq 100 and its performance against the interest rate. So straight away there are a couple of observations that are very important. Look at this flattening of the interest rates over here, held at around 6.5%, then again a flattening of interest rates of 5.25%, even small one over here. So we can safely say that once interest rate increase, there is a period where they keep the rate stable. But the key thing to note is look at what is happening when the interest rates are flat like this. We are seeing the tops in the market, and when there is easing of interest rates, we are seeing a corresponding drop in the market. Same thing over here. Look at this top of the market, then we saw this small drop over here. This was before COVID, so we saw the COVID drop. So basically, based on the past history of more than 20 years, if there is a flattening of interest rate during this year or the next year, there will be a little bit pump that can indicate that the market has reached its top and there might be a drop soon. And these drop in interest rate are roughly 5% every time. So if we stabilize around 5.75% interest rate, so a 5% drop would mean 0.75 will be the interest rate. So given this simplistic analysis, it looks like that yes, Michael Burry might be right once again. Now another interesting thing to see on this chart would be what does the drop look like. So if we take this peak and go to the bottom, we are talking 77% drop. Let's check this one over here. This is another 47% drop. Then we have this small one at COVID, which is roughly 13%. But the key takeaway is when the interest rate increase a lot like what is happening right now, we are seeing a drop in the market of roughly 50%. So this was 2008, this is the 2000.com bubble, and this is what is happening right now. Another thing to note over here is that the flattening of the interest rate looks very small, but is actually a 7-month period over here. Then let's check this one. We are talking about roughly 14 months. So somewhere between 1 year to a half year is the time period where we might see flattening of the curve that will take us to around second quarter of next year, and then all of this drop might start happening. Also, what do you think about this? Do you think Michael Burry is right this time, or no, he will be proved wrong? Let us know in the comments. So yes, maybe he is right once again, but now let's try to change this chart. The orange line, which was the Nasdaq 100, I will replace this with the SP 500. So let me just remove this and add the SP 500. Straight away we are seeing a very similar thing around the stabilization of the interest rate increase. We are seeing market tops again over here also. This was COVID, and now we are approaching similar area. So once again, let's see how much drop we are seeing in the market. This is around 48% drop in the S&P during the dot-com bubble. Then 2008, we are talking about another 50%. So if we assume that the peak will be somewhere around here, 4,700, 800, what would 50% look like? So this is just insane. It means that the S&P can really go till 2,300, 2,400. This will be devastating for the market. This will destroy a lot of investors. Talking about major drops in the market, let's quickly check the fear and greed index, which is sitting at the start of the greed section, about to touch neutral. And 2-3 weeks back, I was talking about exactly this scenario, that we will try to dip into the neutral range and then try to bounce from here. So do let me know what you think is going to happen. Is Michael Burry right this time, or he will be proved wrong? What are your thoughts on this? Do let us know in the comments. And if you enjoyed this video, please don't forget to subscribe, like and share. Hit the bell notification so you are notified whenever we upload a new video. As you can see, markets are extremely volatile. If you are actively trading, please consider using proper risk management. Thank you for watching.